Yo, what's going on, guys? Welcome back to the channel. Today's video, I'm just going to be going over some of the trades that we took throughout the whole week and just do a recap so you guys can better understand the system and how I trade these option charts every single day. So, we're going to go back and just view some of the trades that we took. Here's some screenshots to, help guide the trade. So, this was on January 6th, which was, I'm pretty sure, Monday. This is what happened. So, we ended up getting a 0 DT cross on the call side right here, but there was no entry point. I mean, right off of open, we had this nasty, like this massive green candle off of open, and like at the time, obviously this chart doesn't show it, but the SMAs were so far from price that there was really no good entry point to take right here, and it's just a super high risk entry, since that price could pull back all the way to the 10 or the 50 before running higher, and that's just a risk I didn't want to take. And I was waiting for the pullback to the 10, which we never got, and then we ended up just ripping higher throughout the whole day. So we did get this wick down to the 10, which did pay. You could have taken that, honestly, but I was just waiting for a 50 dip at that point. And the market was bullish at this time, so you could have bought that 10 dip to just ride the trend and then close it if we broke below that 10, which did right there, and got back above, and then we rode higher. So that was a trade you could have taken, but this initial cross right here, there just wasn't a good entry point at all. So if you miss that move, it is what it is. Just gotta go on to the next one. And then it was just a very unfortunate day on Monday because we missed this cross right here that gave a massive move, and then we got the 50 dip, but obviously it didn't provide a move. So we just got destroyed on both ends of the stick there because we didn't get the cross, no entry, and then we get an entry at the 50, and obviously it doesn't hold. So just an unfortunate day on Monday. It happens. You just got to move on the next trade. And then this was just a 30-minute chart throughout the week. I'm not exactly sure what day this was. Was this Monday at close? Yeah, Monday towards the end of the day here, 3 o'clock. We ended up pulling down in the 50. And then you could see we ended up getting a bounce off the 50. I remember I was saying that I was pretty bullish going into the next day because this 50 did end up like curling up a little bit at close. We got a little pump at open, and then this crossed negative. So once the 50 ended up breaking, in closing below it, this led to the market getting sent neutral, and in turn we get a downside move because a lot of the times when one side loses the trend, the other side gets a solid move. So in this case, the bulls lose the trend, the bears would get a nice move, and then this cross kind of gave that confirmation. We end up getting, this is like a textbook cross. We get the cross, we get a cross right here, pull back to the 10/50. 50's trending up super hard, and we get a massive move out of it. These types of crosses that happen, like this exact chart, is just it's the most textbook setup there is when it comes to a cross, because we get a solid move which causes the contracts to cross, but then we get a pullback right into the 10 or the 50, which really lowers the risk on the trade, because if you enter at this 10, the 50 is right here, and if it breaks below, your risk is super small on it, and then the reward is super big, because look at this move we got out of it. This was a textbook cross right there, and yeah, I mean, that was just a super clean move. And then eventually, since the market is neutral, you're not going to hold this thing all the way. You would scale out on this initial move up here and pretty much sell everything because we are still neutral, and you would just wait for another trade setup. So you'd wait for a reclaim of the 10, which we got right here, and I remember I gave this one out. This one ran like 120 points. We got back above the 10 SMA right here, closed above, and then I waited a little bit. I entered on this candle right here, on this little dip down to the 50. Didn't tap it exactly, but I knew that we closed above the 10. Most likely this is gonna wick above and hold the 10. So I entered. We got a very good entry on this, and then we got a nice move down lower, and yeah, we got a very nice move out of that. I remember it was like 120 points I sold it for. Ran a little more, but I mean, can't complain with 120 points in neutral market. Another setup we had. This was a loser. So this is what we looked like. The market was neutral, I believe, at the time. So I was waiting for this 10 SMA to hold and it curl up some bit. So I got in right here, and then it immediately ended up wicking down, and this 10 SMA pointed down. So I got out for a small loss, and then we ended up taking another break-even trade right here. So we got back above the 10. I went short. It gave a nice move. Don't get me wrong. I got like 40 points out of this, but I was looking for more continuation, and we didn't get that, and I ended up getting stopped at break even on my position. So I didn't really get a chance to trim any. I was looking for more. Is what it is. that'll happen when you're trading. Like moving your stops to break even is a very good thing to do when, once you're up a decent amount, just move the stops up. You don't want like that position to go red once you're, up 40 to 50 points on NQ. You know what I mean? It would suck letting a position, be up that much, then flip red on you, and then you take a loss. So, it's a good way to limit risk. Another trade that I took right here, the puts ended up crossing. I'm pretty sure the market was, were we bearish at the time? I think maybe we were still neutral. But we got this cross right here. This is a very low risk entry. We're at the 10 here, got in, and then we ended up stopping out because this 50 ended up opening very weird on the 10, was it 1245 or I think it was the 1250 candle. The 50 ended up like sloping down, so I got out immediately for like a 10-point loss, and then we ended up ripping a lot higher, so it saved me. When the 50 changes direction and like during the trade, I usually just get out. If it like ends up like pointing down or something like that, it's just best to get out and just wait for that 50 to curl, and that saved us on that trade. So those were some of the trades that we took throughout the week. We caught some good ones, caught some losers as well. Obviously not going to win every single trade, going to have better weeks than others, have worse weeks than others, but if you just remain consistent with your risk, taking good setups depending on the market and taking your gains, you'll be very well off with the system. So that's pretty much what we did throughout the week. And again, just a little refresher on the system. So when you're trading the system, these are the things that you gotta take into consideration every week. So we have 4 contracts we watch every single day of the week. So it's the Friday contracts, 2 of them obviously call and put, and then a 0DT chart call and put. So you pick the Friday contracts on Monday and Fridays. You use the ones on Monday all the way up till Friday. Friday, you pick new ones, use them only for Friday, then repick on Monday, use them to Thursday, repick on Friday, and then you just rinse and repeat the process. And then obviously 0-day charts, you pick new ones every single day, because there's 0-day charts, they expire at the end of the day. So that's how you go about picking new ones. And if you guys don't know how to pick them, I went over a million times. I don't want to repeat myself because it just takes too much time. But watch the option strat video. Pretty sure I have it pinned on the YouTube on how you pick them with the rounding and stuff. It's just kind of a waste to explain that right now because it's simple rounding. But yeah. Again, 30-minute tells the trend on the Friday contracts. For the Friday contracts, the 30 minutes is the main time frame that you want to be using. And then you use the hourly, 2-hour, 4-hour as, like higher time frame areas where we could reject from or continuation. Like right now, this hourly ended up crossing. The 2-hour ended up crossing. The 4-hour is pretty much going to cross right now. Obviously, we're probably going to get different contracts on Monday because these are the ones we used on Friday and we did drop a bit lower, but just for example, and then we have not that chart. I know that we do have a daily 50, but you just use these charts kind of to gauge how far the trend goes. Like right now, I still think we might drop a bit lower. I know we're going to get new contracts on Monday. Most likely we're going to get maybe the 575s. And if you look here, as you can see, this 4-hour chart broke the 50. If this goes and crosses, this daily 50 might break because we already hit it once, twice, 3 times, almost 4 times. We're at it for like the 5th time. So I kind of do favor this breaking at some point because of how many times we hit this 50. So it's good to use these higher time frames to see how far the trend goes. And like obviously, the more times we hit the 50 here, the less resistance it will be. Also, the more slope down the 50 is, the stronger the resistance, the more flat it is. So like flat, like as you can see this like background here, these lines, these dotted lines, flat just meaning obviously flat. If it's more level, then it'll be less of resistance. And with how many times we test this, like I said, I'd favor this breaking. I wouldn't consider it too much of a resistance point at this point, just because we have all these other time frames crossing at the moment. And if this 4-hour goes and crosses, I feel like that's going to break the daily 50 and we're going to see even more downside. So 30-minute tells the trend. Right now the market's bearish, so that's where we focus on the short side. 0DT cross on puts, 50 SMA dip on puts. That's like the most important thing is knowing what trades to take when depending on the market we're in. Like we're bearish, so you're able to buy 50 dips on the 0-day chart, and obviously 0DT cross on puts is the most favorable trade. Also, those 50 dips are most favorable. You don't want to be taking like a negative cross on puts. Like that just would not make any sense. The main trend's bearish. Why on earth would you be taking a negative cross on puts when we're trending bearish? A lot of times that's just going to slam right back up and cross, and you're going to get destroyed. So that's the most important thing, knowing what trades to take depending on the market. So, for neutral, then, you should know that moves might not be as big. You got to take profits quicker. You don't buy the 50 dips on the 0-day chart when we're neutral. So if we go to the 0-day chart, I'm just going to take Friday, for example, 585 puts. You would not buy like down in this area. You would not buy down in this area if the market's neutral. You wait for the reclaim of the 10 when we're in a neutral market. And by neutral, that means that neither side of the premiums cross. So if we go to the chart right here, obviously the puts are crossed. The 10's above the 50, but let's just say if we go to this side of the chart, okay, like in this area, the 10's below the 50, so that means we're neutral here. And then if you go to the put side or the call side, and if we go back to this side of the chart, 10's below the 50 back here, that means we're neutral. I'm just saying if this is what the chart looks like. Obviously, that's not what it looks like if we go, the current charts aren't neutral because the 30-minute is crossed on the puts. But I'm just giving that for example. If neither side has a 10 above the 50 with the 50 flat or curling up, then that means we're neutral. So that's kind of how you determine the trend in the market. If puts are crossed where the 50s, trending up or level, that means we're bearish. If calls are crossed on the 30-minute with the 50 level or curling up, that means we're trending bullish. If neither happens, then that means we're neutral. And also, if we get across and the 50's down like this, like how it was right in this area, that means we're still neutral because we need the 50 to level or curl up, which happened right here on the open on Friday is when the market flipped bearish. As you can see, we got this massive ring candle which curled the 50 up, and that started the trend. So yeah, little rundown of the system, just a refresher. I'm probably just going to do this every week just so I nail it in your heads and you understand it more, because I see a lot of people just take wrong trades with the system. Taking negative crosses when you shouldn't, buying 50 SMA dips when you shouldn't, and yeah, just nail it in your head more. I'll probably just do this every Saturday, just give a recap of the week and just give a rundown on the system. So yeah, if you guys enjoyed, drop a sub. If you guys want to learn, Discord down below, me and Colin run it up in there, and that's where all the trades are shared, all the info, knowledge is in there if you want to learn. So yeah, hope you guys enjoyed. I'm out. Peace.